Hello friends, my name is Dheeraj Vaidya from wallstreetmojo.com. This is part 32, that is the second last video of our ratio analysis video series, and in this installment we learn all about trading volume. In simple terms, trading volume reflects the total number of shares of a company that are traded during a specific time period. So in this tutorial we basically have four objectives. Number one, it's to understand what trading volume actually means. Number two, how do you find the trading volume? Number three will be to find the trading volume of Colgate. And number four, what's its interpretation and uses. But before we jump into the tutorial, a quick reminder. We'll be needing all the working files of Colgate case study for this video. So if you haven't downloaded it yet, please do so from the link in the description box below. And also, to keep yourself updated with investment banking and core finance concepts, please do subscribe to our channel, Wall Street Mojo. So let's get started. What is trading volume? Trading volume is a part of the ratio analysis framework and it comes under the external liquidity risk category. In our last video, we discussed about the bid-ask spread. And this trading volume which we are going to discuss now is very closely related to the bid-ask spread. Now, what is trading volume? As the word suggests, it represents the number of shares which are traded on a daily basis or let's say within a given time frame. When we are talking about stocks which are listed on the stock markets, there would be the total number of shares that will get traded, that will exchange hands from the seller to the buyer. That transaction happens how many times during the day is known as kind of trading volume. When let's say the trading volume is high, what it means is that you can easily sell your stock, you can easily buy any stock if you want to. But when the trading volume is low, it becomes kind of difficult to buy or sell the stock. So let's take an example and then you will understand what this actually means. Let's say there's a company A, okay? Company A and company B. Okay. And the daily trading volume for let's say company A is 1000 and for company B, let's assume it is 1 million. And let's say you are the owner of 2000 shares of both the companies. So you own company A and company B, both of them, and you have 2000 shares of each one of them. Now my question is, which one is easier to sell? Now think of the trading volume first, okay? Trading volume means, again, how many shares can you sell or buy on a daily basis on an average. So these are like average numbers. So if you're an owner of 2000 stocks, that would mean on an average, it might take almost 2 days for you to sell that stock. So it might take 2 days approximately. Okay? But what about this one? If you're the owner of company B, 2000 shares and the shares traded are like 1 million on a daily basis, how much time do you think it will take to execute and sell the shares? Not much, right? It can happen within minutes. So let me write here within minutes. Okay. What I'm trying to tell you here is that trading volume does affect lots of things. One, as an owner and a seller, you need to be aware of what the trading volume of the stock is. And the second is, let's say, if what happens to the price. Let's say in this, let's introduce one more condition. Like for example, the price. The price of the share is, let's say, $50 here, and it is again $50 here as well. Price per share is $50 and $50. What is this price per share? This is the last traded price. Now, you as an owner, you want to sell 2000 shares. What does this mean? This means that you want to sell the share at any cost. Let's say you want some liquidity, you have some expectations of payment that needs to be done over the next 2-3 days and you don't have much time. So what you will do as an owner is you will liquidate the stock. What will happen to the price? If you are the owner of company A and you want to sell 2000 shares, okay, what happens to the price? Will you be able to sell all the shares at $50? No, you won't be able to, because there are not many people who are interested in buying the shares. That's why the trading volume is very low. So you might have to attract, the buyers, right? So maybe you might sweeten the offer by lowering the price, $45 or $40. And if there are not enough takers, maybe $30 would be the desperate price at which you might have to sell, right? What happens when you are the owner of this type of a stock? There is a very high price volatility, and you might not be sure as to what is the amount that you might get in return if you own a large piece. But let's say if you were the owner of company B and you wanted to liquidate this, right? At what price do you think that might happen? If that is company B, since the number of shares collectively is much lesser than the trading volume here, then you're pretty sure that you might be able to sell at $49 or maybe $48 or maybe at $50 itself. So that happens when the company is highly liquid or highly tradable, when the trading volume is very high. So that's the kind of implication that you need to be aware of when we're talking about trading volumes. And it is very closely related to bid-ask spread, as I said. If the bid-ask spread is very high, that will lead to lower transaction volumes, right? So what do you mean by bid-ask spread, by the way? The bid price is the price which the buyer seeks, right? Looks for. And the ask price is the seller's price, right? The seller is looking for this price. So let's say if $45 is, let's say the buyer is comfortable at buying at this price and the seller is ready to sell at $50, the bid-ask spread will be 50 minus 45. Okay, but if the bid-ask spread is very high, let's say the buyer is only willing to buy at 20, the bid-ask spread will become 30, right? In that case, there will be not many sellers and many buyers altogether, and the transaction volume will be very low. When we see that the bid-ask spread of a specific stock is very high, you can safely assume that the trading volume will be low. Here, the trading volume will be low. Okay, and if the bid-ask spread is low, the trading volume will be higher. Okay, let us now look at how the trading volume of Colgate looks like. So here is the chart of trading volume of Colgate, and this is the chart of the last 1 year of its trading volume. As we can see, the trading volume has been fluctuating, and it has shown a peak of around 12 million, and it has shown at the lower end, I think it was at around 1 million. But on an average, if we look at, this has been in the range of 3 to 4 million. 3 to 4 million trading stocks volume every day is a pretty good number to look at. So this is a highly liquid stock with a good trading volume. If you want to buy this stock or sell this stock, you can do it at much ease without impacting the share prices as such. This is how you typically interpret the trading volume. I hope you found this video to be useful. Please do like and share. And if you have any feedback or want to suggest a topic for any future video, then you may do so by writing about it in the comments section. Also, we come up with interesting videos on investment banking and core finance topics regularly. So if you haven't subscribed to our channel yet, please do so by clicking on the subscribe button below so that you can get the notification about our latest videos. I hope you enjoyed the video. Have a nice day.